Ironically, the Fed indirectly affirmed what is coming for XRP, as did the Securities and Exchange Commission. Therefore, in today's video, we will discuss both of those topics. We have been anxiously waiting for the positive news to start coming in for all of you amazing XRP holders back home. And I am aware that some of you may be thinking, oh, I am tired and sick every day. Although we have positive news, XRP's price isn't soaring. Here's the thing, folks, and this is what you must keep in mind. The money supply, or M2, is the foundation of everything. All right? Therefore, it is highly improbable that we will see the kind of completely crazy mega pumps that we had in January, December, and November of 2024 if the money supply isn't growing. And you know what? Here, rate cuts are imminent once again. Therefore, you should lock in because much of the price activity is typically anticipated in the cryptocurrency markets 3 months after rate cuts occur. Therefore, now is the time to exercise patience because, should the Fed lower rates now, as was the case in November of last year, things will spiral out of control over the course of the following 3 months. So let's discuss it. A new rulemaking plan to improve crypto regulation has been published by the SEC. On so many levels, this is crazily enormous. But first and foremost, it will assist Wall Street in actually beginning to raise funds for their own cryptocurrency projects through initial coin offers or IDOs and large pre-sales. Indeed, those cryptocurrency initiatives will be housed on existing blockchains. Many people believe that this will happen on Ethereum, Solana, XRP, or any other cryptocurrency, but they will be releasing their own stablecoins, which will probably eventually be cross-chain. This means that while they may start off on Ethereum, such stablecoins will eventually be cross-chain on XRPL, Solana, and the Binance Smart Chain. They will be accessible everywhere. Because of what is happening right now, large banks are able to provide these stablecoins to all of their customers worldwide, potentially generating trillions of dollars in revenue. I am really excited today since this is huge on so many levels. As you can see, Chair Paul Atkins gave a preview of the SEC's plans to update current crypto regulations in July. These include outlining how its broker-dealer laws relate to cryptocurrency and putting forward regulations regarding the offer and sale of digital assets, which the SEC stated may include specific exclusions and safe harbors. A major victory for the digital asset market, which is already expanding in 2025, would result from the regulator's announcement that it will also examine changing its regulations to permit cryptocurrency trading on national securities, exchanges, and alternative trading systems. Therefore, it's not simply the pre-sales as I previously stated. With this launch, these institutions will also be able to provide crypto custody services at last, all right? This is now being revealed. This month, we will have a clearer idea of what it will look like. Furthermore, I anticipate that the biggest banks won't hesitate to take action. There is just no reason for them to put up with this any longer. Like they now do with the bank, they wish to provide custodial services in order to profit from transaction fees. They naturally prefer stable coins as they can purchase a huge quantity of treasuries and earn interest on them. This just makes sense, of course. For all of these banks, this is a completely new way to generate trillions of dollars in revenue. Why wouldn't they exploit this right away? It goes without saying that they will. They are in the business of making money, so they desire. Their goal is to earn money. Their focus is on money. That is a bank's main objective. This is crazy. Then, in addition, there are numerous events occurring within the Federal Reserve, such as Lisa Cook being grilled. After opening a criminal investigation on Lisa, the U.S. Department of Justice is now practically attempting to have her removed by force. Rate cutting is something she opposes. Donald Trump is aware of this. His goal in starting this probe is to persuade her to step down so they can replace her and continue lowering rates until the end of the year. That is amazing. I believe that if this is true, there may be 3 rate reductions before the year is out. And you guys should just wait if there are 3 rate decreases before the year is out. Lord, please. After a few years at 50 cents, you believe $3 XRP was fantastic. Just wait till it reaches 5, 10, or even 20. Then when the XRP ETF sees significant inflows as well, that's when it will happen. This is a possibility that we are considering, and it should thrill you all because the current price of XRP has about 10 times the potential. That's fantastic news. Bank of America is now voicing opinions regarding the US dollar as well. Additionally, they just came out and made statements regarding cryptocurrencies, stating that they believe they are the way of the future. However, they now claim that although the US dollar is overpriced, it may drop in value the next year. Therefore, it is now overpriced. They believe that excessive use of it is occurring. Too many treasuries are being purchased. Another indication that rates are likely to decline for treasury yields is this one. It's just something that's probably true. The government is unable to pay off all of its debt and these enormous yields. These rates must be reduced. No other option exists. The markets must receive more liquidity, and the U.S. labor market is in severe distress, which is the cause of this. In August 2025 alone, the number of job layoffs increased by 88,736, the most since August 2020. This raises the overall number of employment cuts for the year to date to 92,000, a staggering 66% increase over 2024. Employers are under a lot of strain due to the state of the labor market. They lack the funding. They lack the funds to hire these individuals. As a result, they must reduce employment. Additionally, AI is contributing to this. Big businesses are beginning to understand that they can reduce their expenses to a quarter of what they were before using AI in place of hiring staff. Naturally, this is what many of these profit-driven businesses are doing since it's what they need to do to satisfy their shareholders. They are not operating as a responsible company if they are not doing this. However, this will fundamentally alter how the economy functions overall. And if not handled appropriately, this might lead to a wider wealth gap. Therefore, we're going to hope that this is resolved. Even more crazy, though, is that the BLS will be updating U.S. employment figures for the 12 months ending March 2025 in just 5 days. Additionally, Goldman Sachs predicts that up to 950,000 jobs will be cut. The largest downward revision since 2010 would be this one. In conclusion, the current state of affairs is much worse than we initially believed. Yes, you will find the link below. If you're interested, sign up. If you like the content, click the like and subscribe buttons. I'll see you all shortly. Goodbye.